Nifty stays range-bound for the second consecutive session. Rate-sensitive sectors like banks and defensives like FMCG lead the decline.
ONGC gains as much as 4% in early trade after first quarter earning beat street estimates. A significant new gas discovery near Mumbai high also boosts the sentiment.
SBI changes gears. Stock rebounds due to short covering despite a series of downgrades from global brokerages including the likes of UBS and Deutsche Bank post-earnings.
Maruti Suzuki surges over 2% in trade after ET reported that the partial production may resume at the Manesar plant as soon as early this week.
And European markets start off lower following weak cues from Asia, hurt by further signs of a slowdown in global economic growth.
Good afternoon, here we go on Markets Lunch and I'm Nikunj Dalmia.
Okay, let's quickly walk you through what's lined up in the next 1 hour on the show. Ramdeo Agarwal from Motilal Oswal Financial Services as well as Suresh Mahadevan, Head of Equities at UBS Securities, with their thoughts on the markets and which way they're likely to head forward. We'll also get you a street view on the daily day with Rajneesh Kumar from Fullerton Securities and a global market perspective with Zahid Mahmood of London Capital Spreads. We'll also get you technical perspective with TK Narayan as well as Ashwini Gujral on the show, and a commodity check coming up with Devang Visaria of devangvisaria.com. And as always on MF Corner today, we will have with us Dhirendra Kumar of Value Research.
Look at Indian markets and things are extremely range bound, and ditto seems to be the case for global markets as well. ONGC is a big propeller. Reliance is trading in a very narrow band. If you check on Bharti is bouncing back on some technical recovery, but banks are dragging markets down. The Bank Nifty is down by about 55 points. ICICI Bank, State Bank of India and then HDFC Bank are leading the decline. So Nifty futures are trading at a premium on expected lines. Things are tight and I guess traders and investors, they're searching for the next trigger.
Okay, let's get your perspective on the markets then. We chatted with Ramdeo Agarwal, Director and Co-founder of Motilal Oswal Financial Services earlier on in the day. And Ramdeo believes that some effort to bring down the deficit will send positive signals to the markets. He also has a positive view on blue chip counters like HDFC Bank and ITC and is bullish on autos for the long term.
Forex balance is at 250, 289, 288. So it is holding out at a just a critical level. So my sense is turning around that permanent confidently will be an issue, and that will show the way for maybe some kind of revival in the market. Most of the stocks which are consumer facing today, say you buy a Nestle, you buy HDFC Bank, you buy I mean whatever I bought, say whether I bought a Can India or whether I have bought any say ITC we have bought. So we have not bought it to revisit in we have not bought it to revisit in next 2-3 years, 4 years. I mean till things go wrong, we will kind of hold it. High quality public sector banks, your automotive, if it cracks, I mean they will be terrific opportunities because they are particularly automotive. Their economics remain good. They are suffering only from high interest rate or slowdown in the economy. But eventually they have to become much bigger. Kingfisher, you saw what has happened. I mean, just few years of aviation venture by one of the most cash-rich kind of a group where they have reached. So I don't want to get destroyed like this by bringing any aviation stock in my portfolio.
Let's connect with Ashwini Gujral for his mid-afternoon trading ideas. Ashwini, 3 hours into trade and we've gone nowhere.
Well, it's a 20-point range on the Nifty ever since we've opened. And, from a high volatility environment, we are now getting into a low volatility environment. Sometimes, this is good for the market that, all the selling is getting absorbed, all the profit booking, etc. is getting absorbed. As a trading strategy, still you will go short if we start closing below 5,300, and similarly you need to go long if we start closing above 5,400 on the Nifty. Meanwhile, in a 20-point range, it's difficult even to get short-term individual trading ideas. So I think people just need to wait and watch which way this cookie crumbles and take that direction. So far for the day, it's been difficult to do too much.
Okay, Ashwini, hold on to that thought. We will get back to you for stock-specific ideas as well. But let's address some stocks which are in the news this afternoon. And ONGC's first quarter earnings, they beat street estimates. The sales have grown a good 24% and the profit is up 48% from a year earlier. Chairman Sudhir Vasudeva has warned investors, however, that in the absence of the exchange rate benefit, the company may have incurred losses. He has asked the government to keep the subsidy burden enough to make the business remunerative.
21.2% appreciation of dollar. As a result, the realization in terms of rupees is more, and that is one of the reasons for our profit to be higher. And another reason is that the dry wells, the charging of dry wells to the profit and loss account is less by about 1,085 crores. We have never disputed this, the government's right in taking under adjusting subsidies from us. Only thing is that the system should be a little more transparent, and we should get remunerative prices. I mean, I have not minced my words. In the past also I have been very vocal about this, that our cost of production last year was $38 before this cess was increased. With that it became $44, and it's been increasing at a rate of something like 8%. So we have projected that the cost of production by the end of this fiscal would be about $47. So if we get $46, it is only because the dollar has appreciated. In terms of rupee, we have gained nearly 400 rupees a ton, from 2,100 to 2,500. That is what has saved the day for us. Had the dollar remaining at the same thing, we would have made losses. The one which is significant is this D1. D1 field we have been producing. This is a marginal field in the western offshore. We have in the first phase we are producing about 12,000 barrels a day from this, and the reserves were about 19 million tons. In phase 2 we have increased, we have hoped to increase the production to 35,000 barrels per day, and with that the reserves, total in place oil reserves will be about 80 million tons. But while drilling this second phase, we have found about 140 meters of new column, and which has been electro logging etc. has been done. The well is now under perforation, has been perforated, it is under testing. So based on the electrologs, we have already notified this to DGH, and the reserves are expected to be of the order of about 50 to 60 million ton more. So if we add all this, total reserves from D1 field, this D1 1, D1 12, 14 put together is about 140 million tons. After testing, we'll have more clarity on this, but this thing back of envelope, we can say something like 60,000 barrels a day. So this is the discovery, the big discovery which has been eluding ONGC for a long.
Well, it's not been such a strong day for ONGC. ONGC started gap up, but now it's trading almost at the lowest point of the day. Bosch numbers have also come out, and if you look at those numbers don't look all that impressive. For the quarter gone by, of course, they follow a different quarter. They've reported a PAT of 247 crore, which is down from 279, which is a dent of about 11%. Revenue is up 6.5%. So obviously, for Bosch, the automotive slowdown is now having an impact on their profitability. Bear in mind these numbers are for quarter ending 30th of June, and the real problem for Bosch has only started after that, because Bosch has gone on record and they've indicated that because of a poor demand environment, they have cut production in their Pune plant, and they're looking at cutting production in their Bangalore plant as well. Bosch on its in liquid stock. I don't think based on these numbers, institutional investors will change their outlook for Bosch, but these are not very impressive set of numbers. You know, sometimes auto ancillary numbers are precursor to what's happening in auto demand, because that's the first, that's the first area where dispatch numbers often start. So if auto ancillary dispatch numbers are strong, needless to say, that just tells you that auto dispatch numbers will also be strong. Actually, let's look at ONGC in the morning. When in the morning ONGC was looking like a charged up stock, but now it's trading almost at the lowest point of the day.
Well, there is nothing much to look at in ONGC. You know, if it gets down to 255, 260, it becomes a good buy. Around 290, it's having problems. We had said that 290, 295 will be stiff to cross. Plus, the market didn't really help by being extremely range bound. So ONGC, I don't think the results have made much of an impact. it remains an extremely sideways range-bound type of stock.
Okay, the big one, which is wherein the numbers are awaited, is Coal India. So let's bring in Gargi to talk about what the street is expecting from Coal India this quarter. Gargi.
Well, Aisha, as far as net profit is concerned, we are expecting almost 4,250 crores this time around on the net profit levels. Net sales, that is expected at about 16,700, a good uptick from last year's level of almost 14,500 odd levels. Remember that both the production and realization for Coal India this time around will be higher, considering sales volume this time around 113 million tons. The year before we had seen some minor, production constraints that the company had. Realizations also about 1,205 rupees a ton is what we are estimating this time around. The auction realization, that will see a good increase in this quarter, 3,000 versus almost 2,250 rupees a ton. But important to see what the management guides on the production for the entire year. Also on the price pooling, that is going to be important. Some FSA, some comments on FSA, that is what is needed from Coal India right now. But most importantly, watch for what is the production guidance, because that will tell you what kind of sales, what kind of net sales that they can garner in this particular year. Also, if at all there is going to be a price hike, a comment on that will also be awaited.
Right, Gargi, you hang in there. We'll discuss Tata Steel expectations also with you. But right now, let's take a detour and go to Darshan and talk about Suzlon. Darshan, who is tracking Suzlon these days? No one.
Hardly anyone, but whoever did track, they did give the estimate. So, but nothing much expected from Suzlon, because it's the same old story that the revenues will be driven by the order book that they have. But even on the domestic front and the international front, operations look weak. They're not getting enough orders. Interest cost is a big overhang on the company. They did manage to repay the FCCB, but the interest cost is very high on Suzlon, which always dents the profit of the company. So we are seeing a 15% revenue growth on Suzlon and a profit, and we are expecting a 90 crore loss to come in, mainly on the back of the forex losses and high interest costs. Remember, last time they had a profit of close to almost 60 crores, but that included a forex gain of 53 crores. So on an adjusted basis, it was just 7 crores of profit last time. This time a forex loss is expected on the company, but the interest cost number and what kind of order inflow they will give in will be watched out for, but not a very, very high watched number for Suzlon though.
Okay, Darshan, thanks for that. And Gargi, what about Tata Steel? What can we expect there?
Well, a weak quarter for Tata Steel. Again, if you see most of the steel companies, they haven't done too well. In fact, 650 crores is the estimate on a consolidated basis for Tata Steel. It's not comparable with the last year numbers. Last year they had, exceptional gain of almost 4,000 crores coming in from the stake sale that they had done in the reverse sale, Tata Refractories, a couple of other things that included in their exceptional items. So not really comparable. But if you look at the net sales number, almost flat from last year, 32,500 is the estimate for that one. Also, if you look at the operating margin, see the sharp decline that is expected there, almost 9.5% versus over 12% kind of levels that we had seen comparing on a year-on-year basis. Breaking Tata Steel into India and European operations, at least for India, we will see a net sales higher from last year. Realizations, remember, have been better because steel prices have gone higher from last year levels. Close to about 49,000 rupees a ton is what we are estimating. The volumes this time almost flat, 1.6 million tons. There will be some capacity additions that the company will announce. Will have finished, in fact, in this quarter. That will probably, give us an understanding how next quarter volumes will pan out. EBITDA per ton this time around about $345 versus $420. Remember, there is a pressure coming in for the coking coal side, which Tata Steel has to outsource at least a part of it. That will be impacting the operating margins this time. Tata Steel Europe and, realizations to volumes, all of this has been hit, and that's the continuing story for Europe, I believe. Sales volumes at about 3.2 million tons, a minor, decline from last year levels. EBITDA per ton, that is expected only at almost $17 a ton. That's important to see what numbers Tata Steel can really, deliver at this point. Low realization and high costs, these two have been impacting the operating margins. There could be some forex element that we may expect that may be impacting bottom line. Interest cost also is important to watch for. That too will be impacting the bottom line in this quarter.
Okay, Gargi and Darshan, thanks very much for that. Ashwini, just want to get you in on the charts of Coal India and Tata Steel, and what is it that, or rather, how would you go about trading these two?
The Tata Steel clearly remains a weak stock, and around 390 there is some support, but slowly that support is likely to give way, and chances are that Tata Steel will fall towards 360. Coal India is something like ONGC. It's not being allowed to do business in a market kind of manner. That is the reason it's become extremely range bound around 300. It finds a lot of support around 360. It has difficulty in